welcome to the Currency Exchange, NatWest Markets FX podcast, where we break down the major themes and events driving currency markets this week and in the weeks ahead. Today, I'm joined by Alvaro Vivanco, who is our head of ESG and emerging market FX strategy. Alvaro, thank you so much for joining me today. I've got to ask you, how has EM done over the past few weeks?
Hi, Eimear. Hello, everybody. Thank you for joining us. It's been quite interesting, I will have to say. Over the last month or so, emerging market, especially on the currency side, has done rather well. And I think that's a little bit surprising because, this comes on the heels of still concerns about US inflation and how the Fed, is going to be set up for the next couple of prints. And overall, the theme for the markets over the last few months has been, when does the Fed actually start the easing cycles? And more recently, even, is there a possibility that instead of initiation of cuts, we could actually see some hikes as inflation has been so stubborn? And the data, right, is not only inflation in the US, but also activity data has surprised to the outside, to the upside. So for us, it's been quite surprising to some extent to see that EM has found a stronger footing. I think that part of it, just from a very technical position, is that people had been long dollars against EM for the last few months, right? That they have kind of unwind the previous positioning of chasing carry. We've seen some corrections in a lot of markets, and finally, once we saw some consolidation, flows have started to come back. So in general, EM has been a beneficiary of the latest rally. Some currencies have really done very, very well. Others less so, but in general, it has been a positive month for emerging markets.
And I guess, you obviously have the kind of global drivers, but how do you think, EM's correlation with those big drivers are changing at the moment?
I think they are shifting a little bit, right? So just for context, over the last few months, it has been mostly about carry, EM carry. So you have to look at, what the local yields in emerging markets are compared to what the dollar is offering, which obviously is based on what the Fed is doing. So it had been that carry differential, that extra yield that emerging markets earn really had been, basically the main and in some cases the only driver for EM currencies performances. I think over the last few weeks, as I was mentioning, I think we're getting a little bit away from that. And I think the theme that's emerging and something that, we as a team have been discussing in terms of a theme, but also in terms of a specific trades, is the idea that commodities have done very, very well. Not just recently, right? But this part of the cycle has been categorized by a strong rally of commodities, which obviously benefits some of these, not all of them, but some of these emerging market currencies. So I think little by little, and I think we're exactly in that shifting point, I think we're moving away from carry and just what central banks are doing, and more into kind of longer term valuations and flows more related to exports and commodities than necessarily just chasing of carry, which to some extent is kind of the normalization of this long cycle since COVID, right? That we saw these major fluctuations in interest rates globally. We're coming towards the peak of that. We think the Fed it starts the easing cycle at the end of this year. And I think once that really consolidates, then investors in the emerging markets have to look back at the traditional and more traditional drivers, which some of it is definitely kind of export driven commodities and just kind of global growth more generally.
Yeah, I think that's a great point, that we have seen very big moves in commodity prices. You have to think it's a beneficiary for a lot of terms of trade for EMs. I guess, what are your kind of favorite or preferred EM longs at this point?
I think some of them were, and to some extent, they're still pretty obvious, right? So things like Chile, Indonesia, Korea, which we had for a little bit longer, are very cyclical currencies. In some cases, the carry It's not what it used to be in Korea and Chile for sure, right? The carry is basically gone, or the advantage of owning these currencies versus the dollar is pretty much gone. But these are currencies that reflect global conditions and commodities. And again, the levels had gotten to such levels that we thought it was attractive to start long positions in those currencies. Some of them we do it as relative value within EM, but more recently we have started to be long against the dollar, not necessarily because we have very strong views about the Fed or that the Fed is going to move anytime soon. But as I was saying before, we have enough confidence, given where valuations are for these currencies, that they will be able to withstand even some pressure from US rate, as long as we are not moving towards a scenario of for hikes in the US, that the Fed will be so pressured that it will actually have to like derail the cuts. I think as long as we have some stability for US rates, which is basically what has happened over the last couple of weeks, right? I think these currencies have enough of their domestic momentum and their domestic story, driven mostly by these external real flows, export flows, to do well. The other story, speaking of kind of domestic idiosyncratic stories, I think, kind of the most interesting for sure this week is South Africa. So I wanted to, ask you, what are your expectations? How you've been following this for the last few months? How do you see it going into the election this week?
Yeah, this is definitely kind of a historic vote for South Africa. It's the first time the ruling ANC party looks set to lose its parliamentary majority since the end of apartheid. I think, opinion polls have been very consistent and kind of showing their slipping popularity. But the big question is, who will they actually form a coalition government with? And there's really kind of extreme election scenario, which really imply kind of two-way risks are. From one extreme, you have the potential they could form a coalition government with the EFF or the MK party. These are parties that, actively campaign on kind of nationalizing whole sectors of the economy, on kind of threatening property rights, the land expropriation without compensation, and also kind of nationalizing nationalizing the economy, but really a move against kind of privatization and private capital markets. On the other extreme, you have the Democratic Alliance, which is kind of the biggest opposition party, which is way more kind of pushing reform efforts, trying to get privatization in to kind of bolster the logistics infrastructure and also the electricity infrastructure, fight corruption, and really bring down the deterioration we've seen over the last few years in terms of fiscal trajectory. It all effectively hinges on how far the ruling ANC poll below 50%. You basically have kind of 42% as your dividing line around this level, to be the extreme outcome. Below this level, you have, the actual positive scenario where you can go into a coalition with a Democratic Alliance.
That's super interesting. So what do you think happens to the rand under these different scenarios, and how has your view shifted over the last few weeks? You have been bullish coming into this. Are you still kind of positive South Africa at this point?
Yeah, so we have been very bullish. I know we put out a very kind of profitable trade, short max ZAR. We have kind of taken profit, stepped to the sidelines because we think that ZAR is not adequately pricing in the risk premium for this political risk event. Our base case is actually that, it's kind of long-term neutral. You get an ANC coalition government with smaller parties, which is effectively policy continuity and just the status quo. However, we think that, investors are really kind of underpricing and kind of complacent to this risk. And it's not just the actual election outcome, but the fact that, you get very delayed kind of negotiation talks in terms of forming a coalition. Remember, this is the first time in 30 years that you could have a coalition at the national level. There's also the risk that you could get a very factitious coalition that could, be very unstable. And also the risk of civil unrest. You've had a lot of kind of provincial level kind of rioting. And this definitely is, a very emotive election for a lot of people in South Africa. So we have stepped to the sidelines and kind of will look to re-enter or reassess the outlook once we get that final election outcome, which should come by the very latest on Saturday.
And the other thing that you had been discussing within Eastern Europe has been the rate differentials, right, between all different ones and kind of the expectations of central banks. Have you changed any of your views there recently?
Yes, as you said, carry had performed better recently, and around the turn of this year into kind of later Q1, we changed our position actually on the Hungarian forint. So we turned long, and it was basically on the premise that we thought the dollar was going to come lower, that vol was subsiding, and this is actually a good time to get back into carry trades, and investors would really kind of look to capitalize on however much longer we had this very historically high carry. I think Hungary really stands out in terms of the fact that you have a central bank which is actually approaching the end of its easing cycle. Really, you only have about 25 basis points or max 50 basis points of easing left for this year. And also you've got authorities which are really kind of committed to guaranteeing, I guess, a minimum level for the exchange rate. In fact, they're offering kind of financial markets a euro half put. So I think that very clear communication that you've seen from financial authorities, the fact that they are, sensitive to currency kind of spot moves, and also that lucrative carry has allowed Huff to outperform. We still think there's a little bit more to go. We are cognizant of kind of political developments, but otherwise we think it's still a good environment to be long Huff at current levels. Well, I guess that's all we've got time for today. We've definitely broken down the major themes that have been driving EM. Alvaro, thank you so much for joining me. If you did like the podcast, please do click like and remember to subscribe to get the latest episode first. Thanks again.